Ahoy there, trader, and welcome back. This is the Anti-Investor Swing Trading Podcast. Let's talk about the single best way to find quality setups in any market environment. Now, one of the biggest frustrations for traders, regardless of their preferred trading style, to find quality setups before the move has started. Now, most of the time a trader only sees an opportunity after the move has started, and more often than not, very close to the move being over. Now, this often ends in disaster for many who jump in, not wanting to miss any more of the move, only to realize that the profitable part of the move is over for the moment. Not wanting to cut those losses short because they're late to the party, then the trader becomes almost an accidental investor because it's going to come back, right? Now, the second trap a trader can fall into is trying to look at every possible stock every day, all of the time. And they end up flicking through chart after chart like a mindless zombie doing the stock market equivalent of Where's Waldo, hoping that the next one is the one. Three of those things sound familiar. So let's look at some of the simple ways you can find quality setups before the move starts. Hi, it's Phil. Welcome to the Anti-Investor Swing Trading Podcast, where we talk about swing trading stocks, stock options, and index futures. My goal is to help the next 1,000 traders become financially independent and retire early from the financial markets by providing the right tools to use, the rules to follow, and the software to assist you so that you don't make the same mistakes that I made. And from now on, I'll be your personal swing trading mentor to show you the way. So if you're ready, let's do this. Okay, so for a better way to find quality trading setups before they start moving favorably would be to move away from trying to analyze every stock or index or ETF or crypto for that matter. Gagging on saying that already, but it's the same principles. Whatever you prefer to trade, get absolute clarity on what you're looking for with your trading strategy. I teach all of my traders 6 money-making patterns. The first one is find a buyable dip in the context of an uptrend. Second one is find a sellable rally in the context of a downtrend. Now, these are my two most profitable, most common trading patterns, which I outlined in the very first podcast episode. So if you need a quick refresher, just go back and visit episode 1. The next 4 are when our confirmed consolidation has been identified. And I can do this in 2 ways. 1 visually and 2 mechanically. The second one is one I prefer 98% of the time. It's mechanical. There's no ifs, buts, or maybes as to whether it has happened. There's no subjectivity. It's binary. It has happened. And as such, I've got to call it a consolidation. Now, it is as simple as looking for the 20-period moving average to cross past the 50-period moving average at least 3 times in the last 100 bars. And if you think about how I've described that, you can use that principle on any time frame. Now, the only way for this condition to happen is for price movements to be flipping and flopping without being trending. Now, before I do go on any further, notice the clarity and the simplicity of the definitions that I use. Everything starts with a trend or the lack of trend. And then you can choose the appropriate rule set to trade. If obviously price is trending, we want trending rules. If it's ranging, we want consolidation rules. More importantly, you can use the software to scan a small number of proven winners for any of these 6 money-making patterns. For the moment, though, let's focus on the 2 trending patterns, which we've already explained in the previous podcast episode, and we can look at range trading patterns in a future episode. As always, I fully appreciate that trading and charting is a very visual thing, and you can visit my website antivestor.com or shoot me an email to phil@antivestor.com, and I can direct you to the video guides to explain everything that you're hearing today. Okay, so quality trading setups is the focus. As mentioned, episode 1 of the podcast explains in detail if you need a refresher, and as you may recall if you have listened to that, I'm looking for the 200, the 50 and the 20 period moving average to be basically stacked on top of each other. The 200 and then above that the 50 and then above that the 20. That's what I mean by being stacked on top of each other. At that point, I will consider the chart that I'm looking at to be in a bullish trend. Then I'm looking for price to pull back between the 20 or the 50 a shallow pullback essentially, or between the 50 and the 200, slightly deeper pullback or retracement. Now this is what I consider to be a buyable dip in an uptrend. Now it's not an automatic buy, I've got separate rules to get me in the trade after that, but this is what will be scanned for. It's not an automatic buy, but it gives me a definitive trigger point for when price does move back into the trending phase. Now those conditions, as I just mentioned, can be scanned for. I have a very nice custom coded software that gives me what essentially amounts to a traffic light system. If price is above the moving average, I'll get a blue indication. If it's below the moving averages, I will get a red indication. So if price is above the 20, the 50 and the 200 period moving average, I'll basically see blue, blue, blue. And when price gives me a buyable dip, I will see blue, blue, red. Blue above the 200, blue above the 50, but below the 20, I'll see a red indication. So I get this traffic light system. Now, the next part to making this work for finding quality trade setups, I've got the scan, I've got the indication, and depending on your software, you can kind of plug in your checkboxes to have it scan for you. But one of the things that is critical to any trading strategy, and that's consistency. So I only want to look at a small number of candidates, a small number of proven winners to find those opportunities. Now, I mostly swing trade stocks. I do trade other things, other time frames, other strategies, but most of the time it is a swing trading strategy using stocks, specifically stock options as an alternative to trading stock. Anyway, that's by the by. We'll cover that in the future. I start all my traders off with a watch list of at least 25 stocks, the best 25 stocks for them and their specific situation, so that they don't fall into the zombie trading trap. Now, every day you can cast your eyes down 25 stocks in a watch list, kind of like a spreadsheet. It's just another way of visualizing that. But you've got a spreadsheet and you're looking at these three columns. You know, blue, blue, blue is we're in a bullish trend. Prices above all three moving averages. Blue, blue, red, we have our first buyable dip. So it's very easy to see visually what a buyable dip on a group of stocks looks like. And you can rank and sort again like you would in a spreadsheet in the software that I prefer to use, so that you can find and filter and sort these very easily. Now, even if you don't have the fancy software, and you're looking at the charts manually, because not every charting platform has that functionality. So even if you don't have the fancy software and you're looking at these charts manually, it doesn't take long to check 25 stocks. They're the only 25 stocks in your universe, so that you can find a buyable dip or a sellable rally or one of the other four money-making patterns that I use. Now, the bottom line in this process to finding quality trading setups in less than 20 minutes a day, or every other day for that matter, is to have absolute crystal clear definition of what you're looking for and then go look for that or have the software do it. The zombie trader trap is to go hunting for setups and trying to find a way to trade the thing that you happen to be looking at. And if you find yourself asking, where's the trade? Then you're zombie trading. So when you have crystal clear definition, you will be able to look at a chart and say, there's the trade. It's a clear and confident statement of fact, assuming that the setup is there, of course. So as a final thought, are you asking questions or are you making statements? This is the difference that will help you find quality setups every time on stocks, futures, forex, commodities, whether you're swing trading, investing, or day trading. If you find yourself asking, where's the trade, versus making a statement, there's the trade, have you got your priorities in the right order? Now, if you have questions or want to plug into a proven production line trading process, as you're learning, this is a simple rule-based system. It's proven, profitable, repeatable. It takes 20 to 30 minutes a day, a few times a week. If you'd like to learn a little bit more about that, then let's start the conversation. Send me an email over to phil@antivestor.com, and at the very least, I'll point you off in the right direction if it's not for you, because again, I appreciate what I do is not right for everyone. If it is right, we can have a longer conversation. Whatever your situation is, I've always got time for serious traders, because I never had anyone to ask when I first started out. That's why I do this. So as I mentioned, at the very least, I'll point you off in the right direction for what you're looking for. And if it does make sense, then we can have a longer conversation about your specific situation. Right then, there's just enough time for me to end scene, roll the credits, fade to black. as our hero exits stage left. I'll speak to you all at the same time next time. Toodaloo, ta-ra, and a pip-pip, and may all your trades be profitable. Keep in mind that futures, options on futures, stocks and stock option trading involves a degree of risk that may not be suitable for all investors. Past performance is no guarantee of future performance. Anti-Investor provides educational information and does not provide financial advice.